Alright guys, I'm back with another YouTube video, and today's YouTube video is going to be stop gambling and actually start day trading. Now the reason I say this is because a lot of people call day trading gambling, and honestly I completely agree with them even as a day trader, because if you don't have a profitable edge or you don't have a profitable model or discretion, practically you're just entering random stuff. You're better off just putting a parlay on sports betting or just going to the casino and putting it on black or red. Like realistically, there is really no statistical edge in the market if you do not have a proven strategy that works. So the difference between day trading and gambling, and I have a bunch of stuff written down that I'm going to talk about today. So the difference between day trading and gambling is if you're trading, you have a profitable statistic, you have an edge, you have proven data that that model works, and you're psychologically there. Number two, gambling is when you don't know what you're doing. You just enter trades because of patterns. You be like, okay, market's going down, I'm just going to enter because I could just enter down. Or market's going up, I'm just going to enter a long position just because market looks like it's going up. That's what gambling is, because 99% of the time, market literally does that to regular people. Now, retail traders versus banks and institutions, obviously they want to manipulate you into thinking, okay, price is going to go up. Why don't I just enter while it's a long position? But realistically, you're going to enter that long position and you're going to get retraced on, you're going to get stopped out, and then it's going to go hit wherever you wanted the profit target to be. So overall, you need to have a statistics proven model and an edge in the market to actually be day trading rather than gambling. Two is going to be a mindset shift. So the difference is confidence in your trading. Now, the only way you're actually going to have confidence in your trading is actually knowing that your model works and trading works. If you've never gotten payout before, if you've never seen someone else use that model and you know it's profitable, because realistically, if you were to make a model yourself, and you don't have any profitable proven statistics, whether it's 1 year of backtested data proving, okay, my strategy actually works. I backtested full of 2024 or full of 2025. So going to 2026, I know that my profitable strategy will work and I will actually make money. Or if you do not have a profitable strategy that you created yourself, if you take someone else's model or you learn it from someone like a mentor or whoever it may be, at least you know that they're using that model and they're actually like qualifying for payouts, they're actually getting payouts, they're actually making money day trading. So this kind of helps your confidence. That at least what helped me when I saw other people also using continuation models. You know, okay, if these other people are making money trading, then why can't I make money trading with the same model? If it's not that, then there's only two other reasons, and it's going to be either my psychology is off, or two, something's just wrong with the strategy, which if it's not the strategy, then it has to be the psychology. So there's pretty much only two reasons why you won't be a profitable day trader. So that's the reason for the mindset shift and creating a trading plan. So this kind of ties everything back together. If you do not have an edge in the market, if you do not know what you're looking for in the market, you're practically gambling. If I'm going to get on the charts and be like, okay, I'm going to enter off a break of structure, fair value gap, but tomorrow I'm going to enter off equilibrium and Fibonacci retracement, then what's the point of a proven statistic edge? If every day I'm going to be doing something different, if I just go based off whatever random confluences I just see on TikTok or on YouTube, that's not a proven strategy to work. And that's technically gambling, because you do not have a statistic edge in the market unless you have proven back-tested results that if every single day you use a different model, then you'll become profitable. Of course, by all means, go for it. But again, you need a profitable trading plan. Now, I don't mean a checklist. Now, I do have kind of a rough idea of what I go for. Okay, I see a strong draw on liquidity, I see a safe entry, I get a retracement, possibly tap into a fair value gap, invalidate the retrace, like whatever it may be. Yeah, okay, I do not sit here and check off every little thing and enter the trade no matter what. I use my discretion. I use my profitable edge in the markets to actually know that my trades are going to hit. I use my years of experience. I use my back-tested results to actually get confidence in my trading plan. I don't just enter off a checklist. Okay, if this happens, I don't just enter. Then it's going to be a systematic approach. Kind of ties down with everything that I was just speaking about, sticking to one strategy. Now, don't get multiple strategies, because number one, it's going to confuse you. Now, I personally do not watch any day trader YouTube videos or TikToks, because I already know my profitable strategy works. I already know what I need to do in order to get payouts, and I already know what I need to do in order to make money off the markets. Now, if I go watch a different YouTuber with a different strategy, then even though I'm fine and I know my strategy works and I'm just going to watch it just for fun, even though I see them doing some like the same things, even if they do one little thing different, let's say someone uses SMTs when I don't use SMTs, and I know I'm profitable not using SMTs, automatically, just how the human mindset works, the second I see an SMT, it's just gonna come into my head, okay, I see an SMT. I could possibly maybe not enter this trade because this SMT doesn't go with my bias. Whatever the case may be. And that kind of throws you off track and derails you from where you're actually supposed to be doing. Because if you already have a profitable strategy, just stick to that and don't listen to anything else. Don't talk about trading with anyone else because you already know yours works. Then it's going to be risk management. Now, this is very important. Only risk 1% of your account size, at least when you're starting. Then you can risk way higher, or if you have a built buffer, that's different. Only risk, let's say if you have a $50,000 account, only risk 500 per trade, maybe even lower per trade, until you actually prove that you can actually risk higher and not blow your account. Because with my strategy, at least, I have a very high win rate and I take low RR trades. I prefer that way rather than taking big, higher RR trades, but also losing a lot more. So for example, with my strategy, it's kind of very rare for me to lose 4 trades in a row. And if I'm risking $500 per trade, obviously the drawdown for a 50K account is usually $2,000. So that means I need to lose 4 trades in a row to blow that funded account, which is very rare. That's either I have a psychological issue or I did not follow my model properly. It's one of those two usually. It's not really a statistical error. A statistical error, it's only going to be 15% of the time that I'll actually take losses. That's due to the model. And then emotional discipline. So a lot of people have a fear of missing out. They revenge trade. You're gonna enter like, okay, no, I lost last trade, but this trade is for sure gonna hit because I just got, like, let's say you entered off a high position, it was long, and then you entered where you were supposed to wait for the retracement and then enter. You'll wait for that retracement and then you'll enter off the flip, and again you'll get retraced and get stopped that again, and you revenge trade it, and you're gonna slowly blow all of your accounts. 1 trade per day, 1% per day. That's it. Don't overtrade and don't miss out on your trades. Don't have a fear of missing out on your trades. There's literally no point because the market's always open. At the end of the day, you can always take a trade, whether it's tomorrow, whether it's next year, whether it's in 2 weeks, whether it's in 5 months. It doesn't matter. You can take a trade whenever you want and however you want. Yeah, the only thing that could possibly go away is prop firms, but again, these prop firms make so much money by milking these people that they probably won't go away anytime soon unless it becomes illegal. But even then, there's always ways around it. But again, the next one is analyzing market conditions. So actually analyze your market, your surroundings before you enter the trade. Now, this is why exactly I don't use a checklist pattern. If I see everything play out, I still might not enter the trade just because I know that something around, if I analyze the market, there might be something that's wrong with the markets that I shouldn't enter. For example, if on the 1 minute I see my model perfectly present, it's exactly what I want to see, but I go on the 1 hour and we're completely different buys. If on the 1 minute I want it to long, but on the 1 hour we see a big fair value gap that's going to be tapped into and going to be retraced on, higher time frame holds higher power. I'm not going to enter and then get retraced on and then want to enter again after. So always analyze your market conditions before entering. Learning from your mistakes. This is the biggest one because for some people have an ego and they do not want to accept accountability that they are wrong. If you do something wrong, if you do not follow your model, if you do not follow your psychological measures, just admit that you're at fault to yourself. You don't even have to admit to anyone else. Admit to yourself and just take accountability. Be like, okay, I'll fix this next time. And that's the only way you're going to improve as trading. Or else you're not going to improve realistically. If you're just going to keep making the same mistakes again, first time can be a mistake. Second time is already a choice. If you literally do not fix the second time, then you're pretty much never going to become profitable. Just take accountability, drop your ego, and actually know what you're doing wrong so you can actually make money from the markets. Now, next is going to be consistency and patience. Always stay consistent. Be there when you're supposed to be. Wake up every day, sit on the charts, sit on your hands until your model presents, until you see your discretionary trade that you want to enter on, and stay with patience. Do not enter the trade. Do not just mess around with the markets. Don't be like, okay, let me enter here, and then I'll exit, I'll enter again. No. Wait for your model. Literally just sit like this. Sit like this until you get your model. Then you can go click that buy button. Then again, sit like this. Don't exit the trade early. Only thing I prefer going is breaking even. If you want to go break even, just so you don't have any risk in your trade, it's a risk-free trade. That's completely understandable. Overall, do not exit your trade. Just sit like this until it hits your take profit. It doesn't hit your take profit, it's okay. At the end of the day, that's how your statistical edge is going to work out. A full recap to kind of understand where you are in trading currently. If you're not profitable, you kind of need to diagnose why you're not profitable. Why are you not profitable? What is the reason for you not making money on the markets? Are you not getting good trades? Are you entering trades when you're not supposed to. What is the reason that is making you unprofitable? Now, if you kind of take accountability and understand why or what, first understand where issues are coming from. Second, fix your issues. Third, put it into live markets, and eventually you'll become profitable if you just keep repeating the same thing. If you repeat the same thing over and over and over again, literally for years, it's kind of almost impossible to not know what you're doing. Like, genuinely, imagine someone works at like a body shop for 50 years. It's kind of impossible after they retire, after 50 years, they're not going to know what to do on cars. Like, you're going to know because you worked there for 50 years. Same thing with trading, or same thing with anything else. If you sit here and actually focus on it and you actually stay consistent and you do what you're supposed to be doing every single day, eventually you will become profitable. Because I mean, it's kind of impossible if you're looking at the same charts every single day. You're not going to recognize patterns. Your discretion is definitely going to get higher. Your experience is going to get higher. Everything overall is going to connect together. That's pretty much it for today's video. I just wanted to kind of come and talk about gambling versus actual trading. Gambling and gambling at a casino, gambling trading is pretty much the same thing. It goes hand in hand if you do not have a profitable edge. Now, strategic gambling, I guess you could say, is what you call a profitable trader, because technically other people can't do it unless you're, I guess, an advantage player. And that's pretty much it for today's video. If you guys want to join my complete free Discord, you can join the link in my bio or through the WAP link. Or if you guys want private one-on-one mentoring, I can also do that. You guys can DM me or comment down below, whatever you guys want to do. And I give everything out in my Discord complete for free. I give a trading glossary. I have daily draws on liquidity, signals, everything you guys need to actually become a profitable day trader. And that's pretty much it.